Broadcast is now starting. All attendees are in listen-only mode.
Everybody, welcome to the final webinar of our winter webinar series. And how ironic, today is actually at 5 o'clock. I think today the first part of spring kicks in. So tomorrow's the first official whole day of spring, but spring kicks in at 5 o'clock today. So this is the end of our winter webinar series, and today we're excited to be presenting how technology is changing benefits. Just before we begin, a couple of quick housekeeping items. We are going to send you a CE credit for participating in today's webinar, so thank you very much. We've got close to 100 people on the call today, so that's exciting. We did this webinar a couple of weeks ago and had quite a few people on the call as well, and some great feedback. And one thing that I want to mention as well is at the end of the presentation today, you're going to be signed up for our Trusted Advisor newsletter. But in addition to that, you're going to get a very short survey. And the survey that you're going to get talks about how well we did today and how we can improve on what we did today. But in addition to that, it also has a section where you can say future ideas on webinar topics that you want to see covered. And this topic today on how technology is changing benefits came really out of feedback that we've received from you. So this is what you guys want, and we've got lots of people on the call. So please take a moment and fill out that survey when you get it. It's only, again, 4 or 5 questions. Put in your comments and tell us what you want to see covered in future webinars. Because as as someone that's been a licensed insurance agent for 30 years, and we have to get CE credits, you might as well make them a value as opposed to something not a value. So exciting times. We're going to be participating, or we're going to be having a great session today on how technology is changing benefits. And we're pretty excited because I'm going to be one of the presenters. My name is Robert Crowder, and I'm the founder of the Benefits Trust. And Ayaz Somani is with us today, and he's with Aluance Digital. I can never say that correctly. And I met Ayaz a couple of weeks ago, or I guess a couple of months ago now, but he's one of those people that you meet, your paths cross, and however we were introduced by a friend, but how, when your paths cross you meet somebody and your paths cross and you go, this guy's really smart. This guy knows what he's doing. And anyways, we were able to talk Ayaz into coming and helping us out today and talk about how benefits and technology and where things are going. And it's exciting. He's going to certainly tell you more about what his company does, but also, Ayaz, one of the things that Ayaz said to me a number of months ago when we first met is he's looked at all sorts of different industries, and he's worked in North America, he's worked in Europe, he's worked in Asia, and he's worked in Africa. But Ayaz said he's looked at all sorts of different industries across the world, and he says the insurance industry, and we're not talking necessarily specifically about benefits at this point, but he says the insurance industry, there's a huge gap that exists with technology and the insurance industry. The insurance industry historically has been this old boys club, and technology has never really been part of it because it's not a sexy industry, but he sees the biggest gap in insurance, and that's really what piqued my attention. So what we want to talk about today is benefits and technology and sort of where things are and where things are going and so on. And I think there's a lot of buzz out there. I think there's a lot of buzz out there about technology. And, I asked, just tell us a quick bit about your company and sort of where you're at and where we're coming at this from.
Yeah, no, absolutely. Well, thank you, Rob. It's great to be back here at the Benefits Trust again and to join in presenting this webinar. Let me tell you a little bit about the webinar itself, and then I'll certainly talk about the company, our company. We've in this webinar, we're going to cover 3 broad areas. So in the first section, Changing Landscape, we're going to look at how digital is changing the world we live in and transforming the benefits landscape. The second section focuses on trends that advisors can expect to see as a result of these technological changes. And then finally, we'll discuss ways for advisors to prepare themselves and their clients for this change. So let me tell you now a little bit about Aluance Digital. In recent years, Rob, we've seen a raft of exciting technologies that have become far more accessible than ever before. So everyone will have heard of artificial intelligence, blockchain, conversational interfaces, robotic process automation. Each of these promises powerful advantages to the companies that adopt them. But there is no clear or easy pathway guaranteeing that a business's goals and problems will magically be solved. Companies that are successful are recognizing that they need to approach digital strategically. So Aluance takes a strategy-first approach to digital transformation. We help our clients to align their digital approach around key points in the value chain. We design user experiences that will map their customer journey. We add intelligent automation to key business processes, and we help companies learn from their digital operations by harnessing data. So we work across several sectors, and as you mentioned, Rob, insurance technology or insurtech is the most among the most exciting. And that's why we're here at the Benefits Trust.
Sorry, insurance and exciting in the same sentence? What are you talking about here?
Traditionally, I have to say, if you go back a few decades, insurance actually was seen as being at the forefront, it was at the forefront of data technology. They were among the first to adopt some of the big mainframes and to use it to come up with actuarial models and all
Very
of that.
true. Yeah.
Uh,
And actually, that brings me to my next point. In thinking about this and in preparing for this presentation, which we did a couple of weeks ago, we're also doing here today, obviously, I thought about how technology has changed in the last 25 years in the benefits business specifically. And we've seen an incredible amount of technological changes that have occurred just in the way we interact with clients, where we're using all sorts of different technologies to interact with clients. Where now you're sending out a set of specs with a few clicks of a mouse, and you're getting a lot of information back and forth. You're having meetings, Zoom, all sorts of different ways. But how we used to do things compared to how we do them today, we can spend hours on that. But technology is alive and well. It's around us. It's being used. It's being implemented in all sorts of different ways. But I think one of the things that fears a lot of people, or has a lot of fear, and or is putting a lot of fear in people in some of the conferences I go to, and some of the discussions I have at the benefits bar, they say, hey, hold on a second. Technology is going to eliminate me. It's going to change what I do, and I can't keep up. I'm too old for this. But I think that you got to put that fear aside to a great extent and sort of look at technology and not necessarily embrace it, but you need to embrace it, yes, but not fear it, because not fear it.
Yeah, you know what, Rob, that's a good point. There's a lot of hyperbole out there, I think, in the conversation that you hear in the media and whatnot. And a lot of people I talk to are worried about things like, are robots coming in? Because we hear about robots all the time, and bots and bot this and bot that. First of all, there's no physical robots that I'm aware of that are, lurking in some factory ready to come and sit in your seat at your desk and do your job. Where robotic automation is coming in, first of all, it's largely software. And secondly, what it's poised to do and is starting to do is take over mundane tasks, the most boring things. So just to give you an example, one of the things I do a lot in my line of work is set up meetings. We'll have an email conversation going, and we'll say with a client, let's set up a meeting and find some time to do this. And if anybody's done this, there's a whole lot of ping pong that goes back and forth around emails, trying to figure out, are you available tomorrow at this time, or next day, or next week, or whatever. I use something now. I just copy in Amy, and Amy, which is actually an AI-powered bot that comes from X.AI. She's great at handling and creating a very, very human-like interface around handling just the setup of meetings. So she'll sort out, I copy her in and I say, Amy, find us time next week to meet. And she does all that back and forth, and saves me a huge amount of time. It allows me to focus my time and attention on other things instead of wasting it on that. And
so you got a robot to set up meetings. That's awesome.
Yeah.
Okay, so let's keep focused here. We got to keep focused, because
yes.
Let's talk about the changing landscape, and let's jump right in.
Yeah, perfect. So let's go ahead another slide here. I think let's start with the word technology, and I think it's used so often that it's hard for us to truly appreciate what it means and the magnitude of its impact. The statement you see on the screen saying that technology has changed our lives by increasing the speed of time, it's an interesting way to think about the impact of technology on our lives and the roots of digital disruption.
So you first mentioned, when you and I first met, you talked about this, the increasing speed of time. What do you mean by the increasing speed of time?
Yeah, it's a great question, Rob. So when we think about how people searched for information in the past, it was largely a manual process, paper-based. Phone numbers, we'd look them up in hefty tomes like the yellow pages and the white pages. Kids would go and research school projects using encyclopedias and by visiting libraries. And businesses bought and sold products and services in physical marketplaces. The point is that everything took a long time. Today, we still do all those things, but the fabric of digital technology has replaced the yellow pages and the encyclopedias, and has changed how businesses transacted. And the transformation is not just about access. Digital has also changed how we share information, how we collaborate with colleagues in our work, and even how we relate to one another.
So what you're talking about is things like FaceTime and social media, for example, and how we collaborate with one another through those. You look at Zoom calls, like you and I had a Zoom call the other day to prepare for this meeting. And I heard of a broker that is in the middle of Canada, somewhere in Manitoba or Saskatchewan, started a brokerage firm. He's closed over 200 accounts, and he's never left his office. And we're talking group insurance accounts, and
Yeah.
he's never left his office. He's
Wow.
just using technology and social media for the people to find him and so on. So that's changing landscape. That's reality today.
No, exactly, Rob. And I think the effects of these changes are increasingly evident in the workforce. Digital is changing the shape of the workforce. Zoom, as you said, and FaceTime. It's no longer face to face. Doing business together doesn't require us to be physically together. As a result, traditional offices are shrinking while shared workspaces are growing. So there was a 2016 McKinsey report on independent work and the gig economy, and it noted that 162 million people, representing up to 30% of the working age population of Europe and the United States, engages in some form of independent work. And for 113 million of these people, it's actually their preferred choice. So just to set this into perspective, here's a chart from Forbes and Statista showing the world's top 10 employers in 2015. And if you add these numbers up, that's 16.2 million employees at the world's biggest employers. The independent workers segment is 10 times bigger than that number of people employed by the world's top 10 employers.
All right. So what's going on here in Canada? Enough
Yeah.
of this, European and U.S. crap. What's going on here in Canada?
Yeah.
I want to. How can I sell more benefits? What's going on in Canada?
No, it's a great question, Rob. It's interesting that we're seeing the numbers bear out in a similar way in Canada. Randstad Canada published a study based on surveys conducted in 2016 of almost 1,800 Canadian employers and employees, and they discovered that non-traditional workers already make up as much as 30% of the Canadian workforce, mirroring the global picture. So 1 in 4 workers are freelancers. Canadian employers predict that these contingent contract consultants will grow to 35% of their workers by 2025, and part-time consultants will make up 1/4. About 1/3 of workers are expected to be virtual or remote.
Okay, terrific. So, how are we going to sell more benefits? How does this relate to benefits?
Yeah.
I'm going to keep asking that question.
No,
right?
good thing. I think Rob, these trends suggest that the workforce, first of all, is becoming more flexible, which is a good thing, I think. But that the employer-employee relationship is also becoming more complex. So, if an independent worker establishes her own office in a shared workspace and moves between multiple part-time jobs or gigs, where do her benefits come from?
So we're talking about a gig economy, and you're talking about these part-time workers and or consultants. So they're actually an employer themselves because they're working for themselves. They might have 2 or 3 different jobs that they're or employers or clients that they are talking to. So they are a company and they are an independent consultant, and they need benefits. So where are their benefits coming from? Well, we can sell them from the Benefits Trust.
Yeah. No, exactly, Rob. Look, I think that the point here is if workers are switching jobs every few months instead of every few years, and if they're holding multiple simultaneous jobs in some periods and no job at all for other periods, then this fundamentally changes the foundation of how employee benefits are going to be delivered. And it's not just the younger millennials and Gen Zers, retirees who are now called transitionees, because increasingly they're not retiring in the traditional sense. They're already a growing part of this so-called gig economy.
So we're seeing all sorts of things in our industry change right now. And let's talk about what we're seeing, what's going on the ground right now. We're seeing things like League. We're seeing things like Great West Life going direct to consumers for these small groups. We're seeing Manulife on TV commercials, buying these products. We're looking at companies like Collage and Rise People and Humi and Zenefits, which was a big splash in the United States, a huge splash in the United States. It was valued at over $1 billion, I think, and then it sort of fell off the radar because they had some problems. They had some significant growing pains. When we're looking at these types of things, Canadians still like freedom of choice, and we're generally speaking very conservative in nature, and especially employers, whether they're large employers or small employers, we're still very conservative in nature. I think a question that a lot of people, I know discussions I've had with end user clients and other people that I know that own businesses, they're just saying, who's going to be around for the long haul? Like there's all these new things that are sort of flashy and sparkly, but what's going to be around?
Yeah, these are great questions, Rob. The digital platform model is on the rise across all business sectors. It's a mainstay of how services, tools, and processes are digitized and delivered. But we're still very early in the digital transformation of insurance and benefits. And it's worth keeping a few things in perspective. So first, I would say let's remember that while innovation brings big and exciting changes, it's also inherently failure prone. An estimated 9 in 10 startups fail. This is a well-known and sometimes even celebrated part of startup culture because failing is how entrepreneurs learn. Many of them wear their failures as badges of experience on a road that will eventually or hopefully be successful for them. But remember also that even promising products launched by huge companies often fail. Way before the iPod, iPhone, and iPad, some of you might remember Apple Newton. It was a handheld that promised a lot, and it failed. But it did also set the road for the Palm Pilot, which came later. There was also things like Netscape Navigator, so an old web browser, the Napster music sharing service, and MySpace, which was supplanted by Facebook. So these weren't really failures, but they were transitory, sort of laying the way for major changes in how we consume and share information. These are also backed by huge companies with competent, intelligent teams, and just as nobody could reliably predict the success or future of these products, none of us can know whether an emerging platform will still be around in a couple of years or even a few months.
You see, and I think that's the key thing is, hey, I had two Palm Pilots. I had, an original Palm Pilot, then I upgraded to another one because they were great. I don't think that they necessarily failed, but they worked well until something better came along. It's as simple as that. But, you're looking at some of these innovative approaches. And again, as I mentioned a few moments ago, let's talk about benefits. And Canadians are conservative. Canadian employers are certainly conservative. And which wagon do you hitch or which horse, or you know what I'm trying to say? Who do you jump on board? We've got all these things coming out there. Do you tell everybody to get a Palm Pilot, or do you tell everybody to sign up for Collage or Humi, or which one do you link yourself to?
Yeah, that's a great question.
Hitch your wagon to. That's what I'm looking for.
Hitch your wagon to. That's what you're looking for. I think first of all, it's really important to be aware of what's coming, but it's also important to understand the risks of these things. So, an employee or an individual going and saying, "Hey, I'm going to take on or have a Palm Pilot." You're going to put a certain amount of data into it, and if Palm Pilots sort of fail, what's the impact of that failure if you have to switch back to something else or switch away to something different, versus taking all of your employee data and sticking it on a brand new platform, and then coming to rely on that, and then finding out that platform is suddenly no longer available. What sort of risk does a company take on? That's a really important aspect to this.
That's a really important aspect, and I think it's important when we look at that, that aspect, and what it's not so much which brand are you going to be jumping on, because that's what you're saying. Don't jump on a brand. But let's talk about the trends. Like, where do you see these trends going? So it's not necessarily, hey, let's jump on the Palm Pilot or let's jump on Napster, because that's just sort of you're picking a number out of a hat, so to speak. But what do you see are the trends? Where are the trends going?
And I'll just say as well, just to end this off, let's not forget that innovation also brings learning and advancement. And over time, this does result in durable change. But yeah, let's turn to some of these trends. I think these are really important to look at. So, perhaps the most visible impact that digital brings to practically everything it touches is a relentless focus on improving customer experience. Digital puts the user's needs first. And that means constantly asking, how do I make this easier for people to use? It's also called delivering a frictionless experience.
Now, it's interesting because when you and I had one of our initial discussions, and you used this term frictionless experience, it's something that I have been thinking about continuously since then. And every interaction of every business that I've had is how do we make this more frictionless? So, what do you mean by that?
Yeah, so friction means a lot of things, to different people. Tedious work, long waits for answers, problems that are challenging to resolve. Digital experiences try to minimize or eliminate these frictions.
Yeah, I'm old enough to remember when, you know, rainbows were in black and white. Okay,
Right.
and I would go into a bank and I would have to fill out a form, and then I'd have to stand in line and say I want to, withdraw $40 from my checking account or my savings account, and then my balance would be updated in a book that I'd always lose, right? So we look at it, now you use an ATM machine. You pop in, and I can't remember the last time I went to a teller unless I was doing something very specific that you couldn't be handled through an ATM machine. We look at all of this right now, and what we're doing here at the Benefits Trust, for example, we were one of the first people to create an app.
Yeah.
Right, just very simple to use. You take a picture of your claim, you press submit. So you fill out the claim form essentially once. You're doing that digitally. We're interacting with people in all sorts of different ways. But do you think we'll ever get to a frictionless? Like how frictionless?
Yeah, I think it's aspirational. I think the friction of any one generation, and how you resolve that becomes the friction of the next generation,
Well,
right? So
that's a valid point. Yeah.
Yeah, you mentioned ATMs and cash. Well, for some people now, it's cash is friction. So you have tap, right?
Yep.
The ability to pay without cash. But these are great examples of moving towards a more frictionless customer experience. And I'll just point out that in the UK, an Adobe e-consultancy study published last year revealed that optimizing digital customer experience is the highest priority of financial and insurance businesses over the next 5 years. In the benefits space in particular, we're seeing that digital transformations are focusing on enrollment and management of employees, so they can get into benefits programs, and making this easier for administrators and most critically, the workers. So we expect this sort of thing to be a continuing and highly visible trend in employee benefits. Another trend that goes hand in hand with digital is data analytics. And you can think of analytics as gathering and compiling large amounts of data in order to discover insights. These insights are most useful when they are actionable. Organizations are finding ways to use the analytics to improve what they offer and how they deliver. So, for example, analytics about a company's utilization of various benefits offerings can be helpful in recommending to an employer how to optimize their package. It can also be used to demonstrate the value of the plan that they currently have by showing management how their employees are making use of those benefits.
It's interesting because if I hear you correctly, one of the things that we've been doing at the Benefits Trust is and I showed it to you, we send out those monthly financial statements. And the monthly financial statements show exactly what their utilization has been on for that particular month, year-to-date cumulative, and after 12 months, previous year-to-date cumulative. We send that to the end user client. We send that to the broker, the advisor, and obviously we have a copy of it. So everybody's involved in that process so they can see the value of those, or see the value of that data. And I don't want to say real time, but very, very very quickly. And we've been doing that for 25 years.
Absolutely. And I've seen those reports, Rob, that the Benefits Trust provides. And it's a great example of how you guys have been ahead of the game, especially in the Canadian context. Michel Boisvert, a senior health and benefits consultant at Willis Towers Watson, commented on this a couple of years ago. He said, that benefits and analytics reporting in Canada remains very high level and basic. And he pointed out that plan sponsors no longer want to look at just aggregate data for the year. They want to know, are programs delivering value, and they want to know that on a regular.
Are they doing it today?
Yeah, are they doing it today? And that's a critical question that advisors armed with your financial statements are in a position to answer for their clients. Another trend that digital is enabling is the possibility of highly personalized benefits. So this could mean that employee gets the option to change up their own mix of benefits according to their individual needs. An employee whose family members all wear glasses or contacts could increase the vision care, for example, whereas an employee with 20/20 vision might opt for more massage treatments. This sort of personalization is already a possibility with health spending accounts, which is an area where I know the Benefits Trust is very much a leader.
Yeah, well, we've been touting this, customized employee benefit solutions for many, many years, and selling employee or healthcare spending accounts for the last 20 years to our clients through our broker population. But as well as that, it's creating that, specialized benefit programs based on classes of employees or groups of employees. I always like to say, what are the groups within your group? You don't, even if you've only got 10 employees or 15 employees or 20 employees, you can have different benefit levels for different groups, completely customized. And that's something that we've been doing because, the Benefits Trust started. I don't think I ever told you this. The Benefits Trust started because 27 years ago, about 27 years ago, we started the Benefits Trust 25 years ago. But the seed that started the Benefits Trust was I had a client or a prospect, pardon me, that was a pharmacy chain. He had 4 pharmacies and he was never going to be Shoppers Drug Mart.
Right.
Never, ever going to be Shoppers Drug Mart. But he wanted a benefit plan for his 10 employees. He had 8 pharmacists. He had a lady that ran the office and all the books and so on, and himself. So he had 10 employees. And they wanted to have a benefit plan that covered all of the things that you would find in a traditional employee benefit program, but they didn't need drug coverage.
Right.
Because they were pharmacists.
Yeah.
They'd call it inventory control problems. They'd call it samples from manufacturers, whatever it was. But they didn't want drug coverage. Nobody could provide it. Not a single company could provide it.
Yeah.
And we're saying, hey, you know what? Personalized service, customized solutions, right? And if an employer is spending, if I'm an employer, if I'm spending $3,000 a year on an employee, an extra $1.25 per hour that employee works, I want to make sure I'm getting the value for that money.
Yeah.
And if the value works for one person, it doesn't work for another person, what have I just done? I'm not getting the value.
No.
I'm getting half the value.
Right.
So I want to get all the value all the time. So how do we do that?
Yeah, no, and that personalization is increasingly important, particularly given the trends we've talked about earlier. And there's no doubt that the Benefits Trust is at the leading edge of this. Looking abroad, there are employers who are pushing the personalization trend even further, especially in the United States. Voluntary benefits, for example, allow employees to access things like gym memberships and daycare and even pet insurance, all at preferred group rates without the employer necessarily sponsoring them. You also see generational differences motivating personalization. So, you have new graduates entering the workforce or questioning the value of standard life insurance benefits, especially when they have no dependents. Instead, they're asking for help in paying down student loan debt. That's not available in Canada, as far as I'm aware, but it's certainly being actively explored in the United States. Rob, it's also no secret that the cost of healthcare is skyrocketing. This is driving prevention and wellness into benefits. So preventative measures aim to avoid healthcare costs by averting an issue before it takes hold. Wellness is focused on reducing stress and improving the quality of life. Both of these result in better employee satisfaction and performance and reduce need for medical and pharma interventions. Is that a trend you guys are seeing here as well at the Benefits Trust?
It's interesting because wellness programs, yes and no and yes. Wellness programs have been around for a little while. They were started a number of years ago in Canada. We've got a wellness option that's available that we can attach to any benefit program. We've had some success in that, but where we've had more success is in increasing limits for psychologists and social workers and so on. Especially with the Bell Let's Talk days that are so prevalent in Canada, and mental health is something that's becoming very widely accepted as opposed to having to hide in the closet and never talk about it. Well, now it's something that's real. So a lot of employers are saying, hey, we want to jump on not necessarily the bandwagon, but we want to take a proactive approach to this, and they're raising limits. We're just starting to see possibly a small trend in wellness, but really the first step is just saying, hey, great, we're gonna take healthcare or the paramedical coverage, and we're going to separate the healthcare or the mental health component of it, and we're going to actually increase limits as opposed to putting restrictions on it, because we want people to get help. We want people to get help right away if they need it.
Yeah, absolutely.
Preventive.
And it's a great it's a really important place to get started on that. I think at the fringes of innovation, we're seeing the wellness theme grow into new areas as well, like financial well-being, into new connected wearable technologies like Fitbits and Apple Watches as a way to track or even coach employees into being more healthy. And in line with mental wellness, doctors, even here in Canada, are starting to give things like social prescriptions where a patient can be prescribed something like yoga or a cooking class or a museum visit, just the way they're currently prescribed expensive drugs. So there's a suggestion out there as to whether and how employee benefits might cover these social prescriptions. You have industry thought leaders like Dennis Garth who are saying that the emergence of new technologies are changing the conversation in the insurance market from illness and death to well-being and lifestyle. And according to McKinsey, those benefits that improve quality of life are the ones that have grown the fastest.
So you talk historically about the gig economy, historically being in the last 30 minutes. You talked about the gig economy and it's reshaping the world, the workforce in the world. It's reshaping the workforce here in Southern Ontario more so than but it's interesting. Actually, I shouldn't say it's just Southern Ontario, because I know a number of people now that are living in places like Huntsville. They choose to live in a place like Huntsville, but they're working for a company that is not in Huntsville.
Right.
So it's reshaping not only the workforce, but where they're living and how they're because they want these lifestyles. But how are you seeing this translate into specific trends?
Yeah, great question. Glad you asked it, Rob. So it actually brings us to the last trend that I wanted to mention. We've seen that the share of independent workers is growing very fast, and that this poses a problem in terms of their access to benefits. Yet at the same time, benefits are more critical than ever. Data shows that when compared with full-time workers, there are twice as many injuries in the sharing economy. Younger workers, who often feel the invincibility of youth, they do need things like long-term disability. And older workers who have retired and then returned to the workforce as independent consultants or in some other form, these folks are increasingly called transitionees, and they also require benefits, which they could previously access when they were employees. So all of this points to a need for the benefits model to evolve. And there's a lot of creative thinking, experimentation, and innovation happening around this. One of the most interesting ideas is portable benefits, where a worker might acquire a benefits plan from one employer and carry it with her to a future employer, or split the sponsorship among many organizations at once. There was a recent Globe and Mail article that looked at this matter exclusively from the pension perspective, but the issues cut right across the benefits spectrum. And I'll mention as well that one of the technologies I think you can expect to play a major role is something called distributed ledger technology. So this is a generalized term for a technology you might have heard of called blockchain. All of these distributed ledger technologies are effectively about trust. It allows different parties to trust one another and can enable things like smart contracts, where you have more transparent claims management. It's especially useful as well in sharing data among parties and acting on that information. So what we're seeing here are digital forces in the future of work beginning to come together and cause a realignment of benefits that focus on how workers see themselves rather than exclusively on how employers see the needs of their workforce. And I think advisors need to consider how they will position products in the future. Will they still be talking about disability benefits or selling lifestyle maintenance protection? Who will be the consumer? Will it be the employer only, or will beneficiaries have a stronger voice and decision-making role?
It's interesting. Who's going to be the consumer? I recently, sometime in the last 12 months, I guess, I participated in a Benefits Canada interview, and they were talking about cost of dental care. And I said, you know what? It's not necessarily the cost of the dental care. I said the patient is too far, or the distance between the patient and the payer of the services is too great.
Yeah.
Right. And if I hear what you're saying correctly, that's got to change, because the benefit is being driven by the needs of the individual as opposed to what the company is saying.
Absolutely. There's a big part of the discourse in the United States is around that triangle of patient, provider, and payer, and where the patient has effectively been cut out in recent decades. And it's just a conversation about, and people are saying, hey, it's my health. I should be a part of that decision-making process. I should have access to that information. I should understand where my claims are and for what, and be fully informed so I can make the decisions.
So that's what we're talking about: healthcare spending accounts. We're talking about having the employees more active in the decision making process. And it's interesting because we've structured some plans where, the employer is creating this flexible environment where the employee makes a decision annually in advance on how much money is going to go into their healthcare spending account, how much money is going to go into their RSP or pension plan. So they're making a decision about their future of their medical needs and their financial needs, but they're also making a future about being with that particular employer for the next year. So the employer loves it and the employees love it. So it's a win-win situation, as opposed to, and this is for a very small group, as opposed to, hey, great, here's your benefit plan, and it really doesn't work for you as a young person. It really doesn't work for you as someone that wears glasses, and it really doesn't work for you as an older person, but it's not bad.
Right.
No value. Right?
No value. Yeah. Yeah. No, that's the conversation is definitely shifting. And I think we're shall we move on to how to prepare?
Yeah, absolutely. Of course.
The third section here. So let me start by with the first thing I think I'll point out is that, most employers, Rob, are not rushing to be early adopters of innovation in their benefits offerings or administration tools. Pet insurance, might sound like a cool idea, but it's not something that's traditionally offered. And a lot of employers will question the value of adding that. Traditional employers are also not in a rush to change because they value stability over risk. So for most, the current way of doing things works just fine. And this is backed up by the data. A study by Hub International points out that only 11% of respondents plan to implement a new benefits administration technology platform or improve an existing one.
But we got to keep an open mind. Advisors need to keep an open mind. They've got to be aware of these things, because people are going to certainly ask, because they read about them in the Globe and Mail, they read about them in the Toronto Star, they read about them in the construction, or hear about them at the construction bars that they go to, right? Yeah. Because they're in the construction business, or the whatever bars they go to. So it's important, I think, for advisors to know what's going on out there.
Well, exactly, Rob. And I think it's also important for advisors to bear in mind that, those expectations are changing. They're not about to change overnight, as you said, but change is coming, and it's inevitable. Just because most employers aren't early adopters doesn't mean that they're not watching and listening to the experiences of early adopters, both here and in other countries. So your clients are going to expect to see improvements in customer experience, in data insights, and your ability to help them tailor their benefits to better attract, retain, and ensure the happiness of their employees. Some of these improvements are invisible as well because they're happening in the back offices. Providers are investing in process automation, taking advantage of digitized data as well as artificial intelligence to help automate decision-making. And together, such process improvements can increase the speed of service and enable greater personalization. So it's important for benefits providers to constantly improve their offering, and for advisors to be aware and champion these advancements to their clients and demonstrate how they can create value within the company and among employees.
It's interesting. We at the Benefits Trust are continuously looking for ways to improve our offering. Continuously. We're always looking under stones and behind, rocks and things. And one of the biggest improvements that I've seen in the last little while is a company that we did a webinar on with earlier this year called Right Health, or Akira, digital healthcare platform.
Yeah.
I've used the program personally. It's unbelievable. You click on your phone, your smartphone, you have a real-time discussion through text messaging with a nurse practitioner, and then that text conversation that I had, elevated into a video call, which I had immediately, solved the problem that I had needed to solve the health problem that I needed to have solved right away. And I completed this transaction within less than 15 minutes while sitting in my office with the door closed, as opposed to having to go to an appointment, wait in the lobby with a bunch of sick people, and then see my doctor and then drive back, and that would have taken half a day.
And not to mention the amount of time it might take to get the appointment. It might be, from 2 weeks from now, and
Yeah.
you have an issue you want to discuss now and deal with right away, right?
Absolutely. So we're always looking for partners on that. And actually, we've got a pretty exciting announcement that we're going to be making very, very shortly with our in partnering with Right Health, and we are just excited as heck about this. But again, it's not that we're all of a sudden changing our technology. We're just linking this onto our offering,
Yeah.
and people can choose it or not choose it, but it's there, it works, and it's going to be something of the future without a doubt.
Absolutely. That's incremental innovation. It's
incremental innovation.
Yeah,
Right way to put it.
absolutely. It's a great example. Another thing I hope advisors
And no one has to. Sorry, no one has to change anything.
No,
exactly. All they have to do is say yes, I want to use it, or no, I don't want to use it.
Right, exactly.
They don't have to change any behaviors.
No. And they can do it on their own time frame.
Yeah.
Another thing I want advisors to take away from this webinar is that the market is bigger than just traditional employers. When you think about the growing number of independent workers, what is it that brings them together in groups that could sponsor benefits plans? Think about the trade and professional associations they belong to. Consider even less formal organizations like meetups and mentorship groups that are forming. Also, are there service providers that independent workers use, or co-working spaces, for example, where you can find them? Even community groups and alliances that form around cultural or linguistic affiliations, are up for grabs.
No, well, sorry. It's interesting. It's interesting you say that, because one of the things that I had a meeting with a couple of weeks ago was a meetup group, a community, if you would, and the community is of like-minded people. And I was speaking to the founder of this particular community, and he just loves it because he doesn't want to be alone all the time. Right. And they have these meetups, and they're informal, but there's 1,500 people in this organization.
Yeah.
And they want benefits.
Yeah.
So all of a sudden, we're looking at that solution significantly differently. We're looking at that solution, for them with some interesting lenses, if you would. And we're able to link some of our specialty insurance partners and put them in place to provide a benefit program or a benefit offering for these communities that is unheard of.
Right.
5 years ago. So we're pretty excited about that. We're also doing work with, and I hate to use the word associations because association means different things to different people, but we're doing some very unique work with some associations that is getting a great deal of traction as well, and using technology and using online platforms to help those members of those particular communities feel very welcome in purchasing benefits and making the right choice. So it's pretty exciting. So if anybody's got any communities or associations out there, reach out to us because we'd be happy to help you out. There's my commercial.
Well, Rob, the work we do at Aluance Digital, helping our clients navigate and map out their digital strategy, is customer centric. It's we put people focused mindset at the heart of everything, and we're constantly asking, how can we improve the customer's experience? And to succeed, you need to know what they're trying to accomplish, to understand their pain points in that process, recognize what they value, and what their priorities are for the future. And I would say advisors can take a similar approach. Are employers and their employees fully aware of the services that they already have access to? Are they making full use of them? Are there areas where you can educate, for example, to improve the experience? According to PricewaterhouseCoopers, 73% of customers say that their experience is as important a factor in their purchasing. Is an important factor in their purchasing decision, and 80% of customers describe things like speed and convenience and knowledgeable help, as well as friendly service, as being the most important factors for a good customer experience. Now that's, across all industries, Rob, but I think it translates to the employee benefits space, whether you consider the customer to be an employer or their employees. Another takeaway, I think, from this conversation is that the excitement around digital innovation and new offerings adds risks. So advisors have an opportunity, even a responsibility, to be the calm voice of reason. I think you're the one who said that earlier, Rob.
Calm voice of reason. That's me.
The
Calm voice of reason.
exactly. Keep abreast of future trends, like those we've been talking about this morning. Take that knowledge and use it to help prepare you for what's coming and help you to educate your customers on the changes that they can expect to see. And remember that for many of your employers, too much change at once can be intimidating. As benefits offerings evolve, easing your clients into the changes at a pace that they can digest is really important. By understanding your client and your benefits partner really well, you can offer flexible choices combined with the stability of a provider like the Benefits Trust, which is celebrating its 25th anniversary this year, right?
Well, I like to say, yes, we've been around for 25 years, but I like to say we've just got 25 years of expensive learning behind us because we've made some mistakes over the years. So it's expensive learning, but really what we're excited about is the next 25 years. Simple as that. I wake up every morning and say, today's a great day to sell benefits. And it is because there's so many opportunities that exist and so many people need help. Technology, I think, and that's what, obviously we're talking about here today, technology and benefits, but, it's something that I think a lot of people fear, but I don't think it's something that you can fear. I think it's just an exciting time.
Absolutely. No, it's definitely an exciting time. And I think people have a choice. They can, like any change, and today's technology might be new, but the technological advancement in general is not new. And people have always had a choice to be afraid of the change that's coming, or to get ahead of it and understand what it is and how to shape it to their benefit, to work for them and to help them to do their job better and add value in new and different ways.
Actually, fear might just be an excuse.
Yeah.
Actually, they're saying that, they're afraid and, oh my God, this new technology is going to put me out of business. Maybe they know they're on their way out of business anyway, not because they're not adapting. It's just because they're not adapting.
Yeah.
Right?
Yeah. No, and you know what? There's value in advisors. I think you can grapple with that new technology and those changes and add value to employers who, to customers who might be fearful or apprehensive, at least, about that change, and show them a way forward. Rob, I want to just add a couple more quick suggestions for advisors to think about before we wrap up. I think paying attention to data and reports from your benefits provider. The monthly statements that the Benefits Trust provides are an excellent tool. Look for insights in that data that can help your clients understand the value of their benefits, and use that information to guide the shape of their future benefits packages as their workforce evolves.
I think that's a critical point as the workforce evolves, and it's knowing your client. Right. And knowing where they're going to go. And in some of the other webinars that I've participated or led, if you would, the knowing your clients is the most critical thing and where they're going. And I love asking that question. If we were meeting here 3 years from today, what has to have happened for you to say it's been the best 3 years of your life? You got to know where your client's going.
Yeah, totally.
And if they are saying, hey, we want to reduce 25% of our workforce and put that out to contract workers, is somebody might look at that and say they got a problem. And others might look at it saying, oh, no, we've got an opportunity here.
Right.
We got an opportunity to deal with those 25 employees or 25% of those employees in a different fashion. We've got a way to structure the employee benefit program going forward because we know that there's going to be shrinking in the workforce. And that creates uncertainty, which creates additional claims. It's about knowing your client, which is critical. You got to know your client. More importantly, you got to know where they're going.
No, absolutely. And you know what? That's
there's your road. Yep, you got to know where they're going down the road.
That's exactly. Yep. I mean, I think this is
3 months, 12 months,
huge
3 to 5
value.
years. Yeah, absolutely.
Yeah, advisors can think ahead. You know your client really well. You know the benefits space. You know what's coming and the trends that are coming out. And if you can take the data that you have access to, and your knowledge of your client and your knowledge of that future, and start to chart out a roadmap into the future, it'll help you to stay a couple of steps ahead of your customers and to you can add value by showing them the possible scenarios and the roadmap forward. Always have a couple of options on hand that fit with scenarios that they may be considering for their business's future. I'd say, being proactive and positioning yourself as the first source for employers on how benefits and employee expectations are evolving. That's an important role that you can take on. Use your client conversations as what we sometimes call a white glove opportunity to talk about navigating expected and unexpected future changes, and make it easier for your clients to start to envision where they're headed, and how they can keep their workforce happy, and that's going to be a more and more important thing. I think businesses are recognizing this because the demographics show that there's going to be a lot more positions that are going to be unfilled than there are employees necessarily to fill them. So, down the road, you're going to see more and more competition for good quality workers. So how do you keep your talent really happy and make their experience as employees, as workers, frictionless, compared to other places that they might work. The final thing I'd say here is partner with a great benefits provider like the Benefits Trust.
Yes, thank you for that commercial.
This is an organization, though, I'll just say it balances the best aspects that I think one could ask for in this space. The Benefits Trust, you guys offer a long track record of experience and stability. You guys are customer centric, and you've always found ways to stay ahead of the game and support your advisor community in staying ahead of the game.
Yeah, well, one thing for sure, we're always looking, as I mentioned, under rocks and behind rocks, and to find new solutions and new creative solutions. We've got a couple of exciting announcements coming up shortly, so stay tuned for those. But I think you hit the nail right on the head. It's about staying, it's looking forward and saying where are your clients going, and how are benefits going to be part of that, and how to maximize the value for the dollar. That's critical. I think you've hit the nail right on the head in a number of different areas. The trends are coming. They're going to happen. Things are going to change. There's going to be a lot of what's the word I'm looking for? And I hate the word disruption. I think disruptor is a word that is used too readily, if you would.
Yeah, it's a buzzword. Everybody likes to use it, and I like to. I find myself often trying to help people understand the difference between change and disruption. Change is coming; it's constant. It's going to be there, and you can adapt to it, and you can see it sort of progressively come out. Disruption is when you're taking an existing business model and turning it totally on its head. Uber is often cited. The Uber taxi relationship is often cited as an example of disruption, which it is, and. There's also the viewpoint out there that everything is open to disruption. Digital could potentially disrupt a lot of different spaces. It doesn't mean that it's going to happen right away or anything like that. And it also doesn't mean that, that companies can't get ahead and be resilient, in the face of that disruption.
And it's interesting because I still think there's going to be a need for a human touch.
Absolutely. There's a huge range of, professions where, I think that human touch is often undervalued, and I think we'll see a lot more value to it. We were talking about this earlier. You can automate all sorts of things, but you can't automate, looking at somebody in the eye across the table, having a conversation and a handshake afterwards. You can't automate things like the human touch that, healthcare providers bring to the bedside when they have those difficult conversations with patients, or even those brighter conversations that help them to see a future in the face of what's dire. So that word I think you might have been looking for earlier, Rob, is turbulence, because.
Good word.
The change does bring about turbulence, especially when you can't necessarily predict it or you're not quite ready for it. Disruption can come out of that turbulence, but if you're relatively prepared for it and you understand that these changes are coming, even if you don't know the exact specifics or the exact right timeline, you can help to prepare for that turbulence and build resilience, help your clients to build resilience so that they're ready, and there's different pathways for them to look towards.
That's a great way to put it, is turbulence. And it's interesting because turbulence, as we all know from being on airplanes, turbulence often is very short-lived.
Yeah.
And people forget about the turbulence because they just want the announcement to stop. Yes, I understand there's turbulence. I understand we have to get back in our seats. I understand we have to put on our seatbelts. We want to go back to our movie. Shut up. Right?
Right.
So turbulence is a great word. You've been very generous. Ayaz, you've been very generous with your time. You've been very generous with sharing your wisdom and your knowledge to close to the 100 people that are on the call today. How can these folks deal with you directly?
Yeah, Rob, you know what? We love having conversations. Digital strategy, the kind of work we do, it comes first from the realization that digital isn't about just building a website or an app. Digital is now so pervasive that companies have to have a strategic approach to addressing it, and that starts with a conversation, because most companies that we talk to have a lot of competing, opportunities or goals that they have in mind, but they're not really quite sure how to organize that. They understand that technologies may work and may not, but what are the economics? What are the technological risks associated with that? So we start with a conversation and we help them to find alignment. And when we understand what the priorities are together, then we are able to come in and work on mapping out things like customer journeys, understanding the processes involved in servicing those customers, looking for growth opportunities as well as areas where efficiencies can be found, and that's a big part of what we do in our work. So reach out to us. Our website, is aluance.digital. You can see it there up on the screen. Go have a look, and then there's a contact us form. That's probably the easiest way to reach out and get in touch with us.
Ayaz, thank you very much for your time. Thank you for sharing. Thank you for your generosity. And thank you all for participating today. You will be receiving a CE credit for participating, and we thank you for that. You'll be signed up for our Trusted Advisor newsletter. Check that out as well. You will be check out our website at thebenefitstrust.com. We've got lots of information on our website, especially in the Advisor Resource Center. And we also are going to be setting up dates very shortly for future webinars. This is the end of our winter webinar series, as it's spring officially at 5 o'clock today. So we're going to continue with innovation, and we're going to continue serving our clients and broker community well. And just want to thank you for participating today and joining us. And Ayaz, thank you for participating and joining us today.
Well, thank you, Rob, and thank you to the advisor community. It's been great to have this conversation, be a part of this.
Great selling in the future, folks, and we'll talk to you soon. Bye for now.